Hi, Professor. This is a team Amazon and eBay. Today we're going to talk about the two giant e-commerce industry leaders, Amazon and eBay. Here is our agenda today. First of all, we're going to cover e-commerce industry in general, and then we're going to talk about the two companies' timelines, other street positions, and risks and business drivers, as well as horizontal and the vertical analysis about the two companies, key ratios. And then finally, we're gonna have our own conclusion about the two companies. Okay, so let's see what's going on in e-commerce industry. As we can see from this chart, 2010 to 2018, the e-commerce in the U.S. growing tremendously. From 2014 itself, they made 2015 there was a 490 billion sale in the U.S. And then 2014 there was 196 million users. And by 2015, we know that Amazon was leading number one and the eBay was number two. And the revenue for Amazon is 107 billions. And then let's see, like 2015, there was 188 million users per month. They visited the Amazon website, which is a lot. Amazon and then eBay, they're a leading e-commerce company. But they are kind of focusing on different parts. They have different rivals. First of all, eBay's competitors are Google, Amazon, Overstock, and then Amazon's competitors are Apple, Walmart, Alibaba, and eBay. But today we're gonna mainly focus on Amazon and eBay and see how they survive in the e-commerce market.
Following are the key drivers for the growth of e-commerce today: 24/7 accessibility, growth of internet and digital world, more access to the information technology systems, the numerous users online, and the ease of access to the system. And the various challenges faced are the difficulty to turn a profit, omni-channel existence challenges, and how to respond to the requirements of the various customers. Following is a portfolio of both the companies.
Now we're going to talk about timeline and history of Amazon and eBay. Both companies established around 1994. Auction Web was founded in 1995. The company officially changed the name of its service from Auction Web to eBay in September 1997. After it went public on September 1998, as you can see in the slides, eBay started a series of acquisitions to secure their market position. In the year of 2002, PayPal, one of the best online payment system provider, became a wholly owned subsidiary of eBay. After 13 years of strong synergy benefits, PayPal is spun off into an independent company in 2015. In the year of 2005, eBay acquired Kijiji, a local classified advertising site, and in the same year they complete their acquisition of Skype. In 2007, eBay purchased StubHub and became the world's largest online marketplace for tickets. In 2014, eBay joined forces with Sotheby's to offer mid-price work of art in the virtual live auction format. All the major acquisition and the new product lines is made to secure eBay's market position as an e-commerce company. On the other hand, Amazon is more diversified than just an online retailer. In 1994, Amazon established and launches Amazon.com as online book retailer. After IPO in 1997, Amazon started its acquisition adventure. In 1998, Amazon purchased Telebook and Book Pages and started their book retailing business in UK and Germany. In the same year, they purchased Internet Movie Database. In 1999, Amazon purchased Alexa Internet, a database company, for $250 million. In 2002, Amazon introduced Amazon Web Service and started their cloud computing service business. In 2004, Amazon purchased Joyo.com and expanded their business to China for the very first time. In 2005, Amazon created Amazon Prime. In 2007, Amazon introduced Kindle e-reader. In 2009, Amazon purchased Zappos, an online shoe and clothing shop, for $1.2 billion. And in 2014, Twitch was acquired by Amazon for $970 million, which indicates their intention for gaming streaming business. In this section, we will discuss the street position and expectations to these two companies. Michel Granama, analysis of Concord Genuity, raised Amazon's official stock rating to buy from hold and also lifted Amazon's target revenue and EPS estimates. According to the analyst, first and foremost, the company's core e-commerce should continue to benefit from secular shifts. The company believes Amazon.com can preserve its dominance as it expands its fulfillment footprint globally over the past 5 years. Amazon appears to be expanding its logistic reach to the point where it seems to be building channels all the way from producer to consumer. Also, the Amazon Web Service is an important driver of growth, margin, and valuation. As for eBay, Aphris maintained eBay's rating as hold, but cut its target price, and noting that its business is stabilizing, but a full recovery will take time. According to Li Dong, CEO of Estimate, after an abysmal third quarter, eBay is losing ground among the top e-commerce websites. The online auction house continued to transition away from its core business in light of Amazon's booming success. More recently, eBay has begun encouraging users to utilize a fixed-price listing, which is believed to help move product and boost sales. Fixed price is somewhat similar to Amazon's model and had always been a secondary option to eBay's core business. However, the competitive pressure from Amazon has forced eBay's hand, as the company is poised for a massive worldwide contractions. Moreover, currency headwinds have contributed to decline growth as a strong dollar and has negative impact worldwide. eBay remains in flux as it attempts to recover from its separation with online payment system PayPal. With stiff competition, currency headwind, and the loss of PayPal working against it, eBay's fourth quarter earnings are expected to underwhelm the investors.
Hi, I'll be taking you through the risks faced by the two companies. Let's look at the risks faced by Amazon. First, the expansion into new products, services, technologies, and geographical regions subjects Amazon to additional business, legal, financial, and competitive risks. Amazon may have no or limited experience in their newer segments. These new offerings may present new and difficult technology challenges, and Amazon may be subject to claims if customers of these offerings experience service disruptions, failures, or other service issues. Second, Amazon faces a significant inventory risk. Amazon is exposed to significant inventory risks that may adversely affect their operating results as a result of seasonality, new product launches, rapid changes in product cycle and pricing, defective merchandise, and other factors. Third one, the data loss or other security breaches. Since services are web-based and the fact that Amazon processes, stores, and transmits large amounts of data, including personal information of customers, failure to prevent or mitigate data loss or other security breaches could expose the business and the customers to a risk of loss or misuse of such information. Now let's look at the risks faced by eBay. First, global and regional economic conditions could harm the business. Operations and performance depend significantly on global and regional economic conditions. Adverse economic conditions and events have in past negatively impacted regional and global financial markets and will likely continue to do so from time to time in future. Second, business is exposed to fluctuations in foreign currency exchange rates. Because eBay generates a majority of the revenues outside US but reports their financial reports in US dollars, the financial results may be impacted by fluctuations in foreign currency exchange rates. Third, the ability to successfully address the rapidly evolving market for transactions on mobile devices. Since a significant portion of the users access eBay through mobile devices, they may lose users if they are not able to continue to meet users' mobile and multi-screen experience expectations. The three reporting segments for eBay, as we can see in this slide, are US for US online marketplace trading and platforms, the international platform for international trading, and the payments. Whereas for Amazon, it has 5 segments. First, the North America, then international, media, electronics, and other general merchandise, and finally Amazon Web Services.
Now we'll be looking at the business drivers for Amazon. One of the major business driver for Amazon is early investment in technology such as Amazon Payment, Amazon Checkout, EC2, AWS, etc. Next is new business solution of form of operation which benefits business efficiency in both operation and cost. The third is strategy guided by the principle to focus silently on their customers, guided by a flywheel framework. The flywheel framework works as follows. Lower prices led to the more customer visit. More customer increased the volume of the sale and attracted more commission-paying third-party sellers to the site. That allowed Amazon to get more out of the fixed cost like the fulfillment centers and the servers needed to run the website. This greater efficiency then enabled it to lower the prices further. The fourth driver is Prime program and an efficient fulfillment capacity. Next is cloud infrastructure services. Amazon continues its dominance in the e-commerce market both domestically and in international market as well. Other than e-commerce, they command nearly 30% market share in the cloud infrastructure service segment, with Microsoft and Google being the other major players. Now we'll see the business drivers for eBay. The first important business driver is economic moat in its business due to its network effect. eBay has a tremendous economic moat in its business due to its network effect, which encompasses of tens of millions of sellers and over 150 million active buyers. Second is marketplace business model. eBay has a marketplace business model which facilitates transaction between the buyers and sellers. This model is an asset light requiring fewer investment in warehousing, distribution, delivery centers, etc., which allows the company to get the higher margins and cash flows. Third is compatibility of its listing description for mobile devices. Improving the compatibility of its listing description for the mobile devices given that an increasing number of transactions now happen on handheld devices. Third is optimized searches. Measures to optimize searches to increase organic traffic is one of the important drivers for eBay's growth. Next is enhancing sellers' experience. Enhancing sellers' experience with more tools for data analysis and ease of use by introduction of platforms such as Seller Hub, a platform which provides analytics and product management tools for sellers, and eBay Wallet, its intermediate selling services. The next is focus on key customers. eBay has been traditionally targeting the entire internet audience with a wide variety of products. With increasing competition from both established e-commerce websites such as Amazon and niche players in specific product categories, eBay is now focusing on certain key customers and deal segments to retain and grow in its market share. Now we'll see some major highlights of Amazon's recent earnings call. First is surpassed $100 billion in revenue. Amazon just reached a major business milestone. The company surpassed $100 billion in revenue in 2015, generating $107 billion to be precise. Second is net income of $1 per share on $35.75 billion in sales. The company reported fourth quarter net income of $1 per share on $35.75 billion in sales. Revenue rose 22% from $29.3 billion previous year. Third is cloud business continues to do well. The company's cloud business, which counts Netflix amongst its major customers, continues to do well. Amazon Web Service grew to $2.4 billion in sales during the most recent quarter compared to $1.4 billion during the same quarter a year ago. Fourth is double the customer base of Prime Video in international markets. Amazon say that it nearly doubled the customer base of Prime Video in international market in 2015, and the viewing hours more than double globally year over year. As for the Prime itself, it grew 47% in US and 51% worldwide in 2015. The company also said that the Prime Music streaming hours more than tripled in the US in its fourth quarter when compared to the same quarter a year ago. The fifth is Fire TV device remains the number one best-selling streaming media player in US. Amazon also claims that its Fire TV device remains the number one best-selling streaming media player in US, which could also have to do with the fact that the company booted Apple TV and Chromecast from its website. Here are the highlights of the summary of recent earning calls for eBay. Non-GAAP EPS of $0.50 per share. Non-GAAP EPS of $0.50 per share, which was in line with analyst expectation and represent a 9.1% year-over-year decline. Second, a strong dollar negatively impacted the business. The strong dollar led to a decline in eBay's EPS. The strong dollar represents a transactional issue. Consumer overseas may not want to purchase eBay's items dominated in dollar, as the strong dollar makes those items more expensive relative to the local currency. Factoring out currency issues, the company fared much better. eBay's reported quarter 4 2015 revenue came at $2.3 billion, which is roughly equal to the same time last year. However, on currency neutral basis, eBay's quarterly revenue actually registered a 5% year-over-year growth. Third is gross merchandise volume went up. Gross merchandise value, which measures the total dollar amount sold on eBay's website, increased 5% year-over-year on a currency neutral basis. The last one is growth for StubHub. StubHub is eBay's e-ticket business. StubHub's revenue came in at $232 million in Q4 2015, representing an impressive 33% year-over-year growth.
In the horizontal analysis of income statement for 2015 and 2014, we can see that the net income of eBay is drastically increased by 3,650%. This can be associated with the fact that the operating income has reduced by minus 52.76%, but the income tax paid by the eBay is decreased by minus 86.42%. Coming to Amazon, the operating income of Amazon increased by 1,154%, but at the same time the income tax paid by the Amazon was increased by 468%. So the net income of Amazon increased from negative to positive by just 347%. In the vertical analysis of income statement for 2015 and 14, we can see that eBay's gross profit is decreased from 81% to 79%, and also operating income is decreased from 52% to 25%, whereas the net income is increased from 0.52% to 20.8%. This is due to the fact that the operating expense of eBay is decreasing from 98% to 53%, whereas in Amazon the gross profit is increasing from 29% to 33%, and operating income is also increasing from 0.2% to 2%, and also the net income is increasing slightly by minus 0.27% to 0.5%. In the horizontal analysis of balance sheet for 2015 and 14 of eBay, we can see that the cash and cash equivalent of eBay is decreasing by minus 55%. This is generally when investment is made on new products or to show more income, and we know that the product of eBay is software based, so the short investment is increasing, whereas the long investment is decreasing. The asset of a company is also decreasing, and we can relate it to the decrease in the liabilities by the fact that the company paid its liabilities. In the horizontal analysis of balance sheet for 2015 and 14 of Amazon, we can see that the cash and the cash equivalent is increased by 9.16%, which shows that company's ability to pay its expenditure. And there is also a rise in liabilities and asset of Amazon, which means that the company is paid for its service and buying new equipments. In vertical analysis of balance sheet of 2015 and 14 of eBay, we can see that the cash and cash equivalent in asset is increasing from 9 to 10%, whereas the short-term investment is increasing by 8 to 24%, and the long-term investment is also increasing by 7%. When we come to liabilities, we can see that the account payable is increasing from 9 to 12%, whereas the total current liabilities is decreasing from 38 to 12%, but the total liabilities is increasing from 55 to 63%. This is due to the fact that the long-term debt or in liabilities is increasing from 15 to 38%. In vertical analysis of balance sheet for 2015 and 14 of Amazon, we can see that cash and cash equivalent in asset is decreased by 2%, whereas the total current asset is increased by 50%. Coming to the liabilities, the account payable of Amazon is decreased by 1%, whereas the total liabilities is also decreased by 1%, whereas the current liabilities is same as the previous year.
Now I will be discussing about the various key ratios. First ratio, earnings per share. Earnings per share is the portion of a company's profit allocated to each outstanding share of common stock. From the chart, we notice that in 2014, Amazon is going negative. This happened because the international market was not doing good and the exchange rates were dropping. in the year 2015, both the companies had a tremendous growth as compared to the previous year. Even though eBay has a higher earnings per share ratio than Amazon in 2015, the growth from previous year is higher for Amazon due to its growth in the AWS segment by 70% of sale. The second ratio is financial leverage. Financial leverage refers to the use of debt to acquire additional assets. From this chart we can judge that in both the years Amazon has a higher financial leverage than eBay. But if we compare Amazon and eBay with themselves in both the years, Amazon has less leverage in 2015 as compared to eBay, who has a higher leverage in the later year. This gives eBay an advantage over the previous year as they can use this liquid amount to acquire additional assets for their operations. The next ratio is current ratio. The current ratio is a liquidity and efficiency ratio that measures a firm's ability to pay off its short-term liabilities with its current assets. From this chart we see Amazon faces a drop in the liquidity whereas eBay has a tremendous increase in liquidity. Hence eBay will be able to pay off its current debts faster and use the cash available in an efficient way to operate the business. Now receivables turnover. The financial ratio which indicates the speed at which a company collects its accounts receivable. Receivables turnover, as we see from this chart, has a small increase for Amazon, whereas this reduces for eBay in 2015. This is good for eBay as they get the receivables back faster. And the last ratio, debt to equity ratio. The debt to equity ratio indicates how much debt a company is using to finance its assets relative to the amount of value represented in shareholders' equity. From the chart we see in this slide, Amazon share prices faces a drop whereas eBay's share prices grow during the year. Thus eBay's shareholders will have higher returns than the Amazon's shareholders.
So investment decision can be taken by the profitability factor for the Amazon and eBay. Here average financial leverage for Amazon is 4.89, which is higher than eBay 2.7. Also gross profit percentage for Amazon is 59.32, which is much higher than eBay, which is just 3.95. If you look at the revenue of Amazon, it has increased rate of 20.02% since 2014, and eBay's revenue has decreased by 2.25 from the time. Amazon is innovating diversification, but if you are the type of investor who ignore stock price evaluation and focus on the underlying company, there is no doubt Amazon is a long-term winner. You won't find this kind of innovation and growth at eBay. So now, would you learn to answer this? Let's quickly take a look to some major ratios required for the decision. For Amazon, the ratio for the company's loan capital, which is debt, to the value of company's stock, which is equity, is 1.06, higher compared to eBay, which is 1.03, which shows Amazon's capacity to pay debt is better than eBay. Another one of the more fundamental criteria in assessing a company's success is Amazon's price to earning ratio, which is much greater than eBay's, suggesting that Amazon is a stronger and more successful company as compared to eBay. So here, as I discussed in previous slides, let's have a look to the revenue growth of Amazon and eBay of last 9 years. It can be seen clearly that Amazon outruns eBay in revenue growth. eBay is a good company, but the exponential growth is no longer there, and it lacks innovation that Amazon offers to find new revenue streams. Amazon offers a lot more upsides potential than eBay.